welcome you to the new start of the week and the new start of the month as well, and the new start of a new season. And we're in fall now, so autumn, fall, whatever you want to call it. But anyway, welcome everyone. So yes, let's see what the market has prepared for us this week. We do have US jobs coming out this week, so yes, let's jump into all that, ladies and gentlemen, and hopefully you'll enjoy the session, and I'll see you in a bit. All right, ladies and gentlemen, hello, and good morning. Let me just double check something because the start of new month, a new week, and I'm seeing that there are some lags in the transmission of the video. For some reason, I don't know. I mean, honestly, this is like not the best way to start the Monday morning. But anyway, ladies and gentlemen, I hope I can see that there is a little bit of a lag coming through. Look, ladies and gentlemen, whoever's watching this right now, can you just let me know if you are experiencing some sort of issues in watching this webinar and listening or hearing from what I'm saying? Just out of curiosity, because again, yes, there is a little bit of a problem, in my opinion, with the views here, with the and now my screen has gone blank. Right, okay, let's have a wait a little bit. Honestly, not the best way to start the Monday morning. But yep, unfortunately that's what you have to deal with. Let me just see what's happening here. Yep. Okay. Right, my screen has gone blank, and ladies and gentlemen, in the meantime, while I'm trying to recover my screen, basically, while I'm trying to recover the visuals of my screen, welcome everyone. Welcome to this first trading day of autumn, first trading day of the week, and of course, as I already mentioned as well, first trading day of the new season. Yes. So yes, ladies and gentlemen, let me just check what's happening here with my screen, because again it is lagging for a little bit here. I think it's the what I'm having the issues with, it's the Windows Explorer. Right, okay, I think that this is yeah, or should I say, sorry, I need to call it Edge now. Yeah, you can sense my age. Anyway, let me just try to restart here everything, and yeah, I think it's a little bit of an issue here with the Edge. Let's see what's gonna happen. Yep. Let's see. Again, like I said, apologies for that. This is what's happening. You know, out of my control, out of my. You know, we just started the webinar and it started just exploding here, everything. So maybe it's not trying. You know, it's struggling to pick up the power. Okay, let me just try to run it on another another browser. I think it would be a little much better here, because otherwise, I mean, this is just not working very well. Ladies and gentlemen, look, we have a busy week. We have the jobs numbers coming through this week, so we have the it's basically, yeah, the week is full of, you know, this is one of the most important ones We are going to be looking at what has happened so far, yes, we'll take a look. NFPs are long awaited. I mean, I think that this is something that the market will be very carefully watching, especially after Friday's big struggle in the market. I mean, we saw the equity world is just kind of, I wouldn't say collapsing, but really going for a hard sell. Look, something is coming through here. Let me see if this is going to work now. Okay. Okay, let me just share. Oh, by the way, before I share my screen, as always, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. In the meantime, I will try to sort out my screens here very quickly, I'll put the usual good morning in the chat room. Good morning, everyone. So yes, let's kick off this one. Okay, so look, what can I say? Also, just a quick mentioning of our Markets.com website. There we go. I managed to get my screens back running. So yes, Markets.com. Check out our website for more information. If you have any questions, reach out to us. We'll be more than happy to assist. And now, there we go, my chart of NFP, but coming through. Okay, look, I mean, let me just fix this very quickly, but it's coming through now. Let me just put this back into perspective. There we go. Yes, there we go. So, ladies and gentlemen, let's, without further ado, honestly, finally, without further ado, let's have a look what's happening. And basically, looking at the cash index here of Japanese Nikkei 225, look at this beautiful sell-off on Friday. I talked about this and I said that, look, this upside line, that's what I'm watching. This one's taken from the lowest point of April. And if it's going to provide good support, maybe we'll see a nice little rebound here. But look, initially I was talking about this little hurdle, this 42,500. It didn't really go any further here, but yes, we rebounded here from this upside line, so that's good. So now let's see what's going to happen here. If we are going to get some sort of a rebound from this upside line, if we so far we're getting that, but another piece of confidence here for us could be on a push back above the 42,500 zone. If we can climb back above it, I'll get a little bit more comfortable with the upside. At the moment, I'm neutral because we're very close to this upside line. The market is feeling the heat so far, yes, the moment we have to be very careful because everything is really on shaky grounds. Let's also very quickly actually, let's have a look at what's happening in the economic calendar. Look, just a second. Let me just put this one on another chart here. Sorry, another tab here. So basically today, ladies and gentlemen, if you don't know, the US and the Canadian markets are closed due to their celebration of Labor Day. Japan came out with their S&P Global Manufacturing PMI reading, the final one, and that came out close. It was it was better than the previous, but still worse than the forecast. But nevertheless, managed to get closer to the kind of expansion territory, basically to the 50. Towards the 50 level, and we know that everything what's above 50 is expansion territory. Below 50, we have contraction. So we're currently still sitting in contraction territory. Let's have a look at so far for how long we have been here. We don't have much data on this one, right? Something new here. Okay, that's fine. Look, retail sales of Switzerland, that's what we're looking at. We already got, and look at the disappointing number here. Oh my God, now this is going to be very interesting to have a look at the Swiss franc, but plus 0.7 on the year-on-year number here against the previous 3.9, plus 3.9 and previous plus 3.6, a major drop here, to be honest. So yeah, we're also getting the Procure manufacturing PMI in a bit. So let's keep an eye on that one. Today, later on, we're going to get the HCOB manufacturing PMIs for the final ones for Europe and Germany. Yep. Also, job numbers. So yes, continuing with the topic of job numbers, or actually starting the topic of the job numbers. So it's European Union coming out today with their unemployment rate, and that one is expected to come out to 6.2. Look, most of the time the European Union numbers are kind of in line with their expectations. Like it's whenever they deviate a lot from their forecasts, that's where the interesting bit comes in. But in general, they're kind of a little bit on the boring side because again, most of the time they are in line. Yes. Going further, tomorrow, Tuesday. Yes, we don't have much during the Asian session, but then we're jumping into Europe. Into Europe in the morning, we'll get the inflation number. So yes, for the European Union, and that's the forecast, by the way, not the final one. That's the forecast. So we're expecting at 2%. It's going to be interesting to see if it actually climbs higher because again, we know that the ECB right now kind of paused their cutting policies, rate cutting policies, because again, we understand that's at the moment. I mean, if for them to drop their rate, below 2%, they're already at 2.15. So to drop them below 2%, I don't know if they're ready for that because again, I think that they need to be worried about inflation in a way. But at the moment, okay, inflation, they can say that it's in line with their forecasts. Something tells me that kind of it's a little bit difficult, in real life matters, in real life situations and real life in general. When you go to the supermarket, then I wouldn't say that this is something around here, around this 2%. Anyway, going further on Tuesday, so yes, we're getting the ISM manufacturing numbers, the ISM manufacturing PMI from the US, which is expected to come out a little bit on the higher side. We'll keep an eye on that one. Going further, nothing major during the from Canada. We're gonna get the same numbers, so yeah, we'll have a look. But sorry, not the ISM, but the S&P Global Manufacturing PMI. We're gonna get from Canada on Wednesday. We're gonna get the okay. Now the Wednesday will be a little bit more interesting in my opinion because Japan will kick off as well with their S&P, but this time S&P Global Services and Composite PMIs, the final ones, so which are expected to remain kind of in expansion territory. That's good. Australia is coming out with its GDP. We're watching carefully. We're expecting a higher number which is going to be below forecast. I think that could be a little bit of a bummer for the Australian dollar. Now China ties in composite and services PMIs. Now this is what's interesting here as well. That's expected to be around 52.5, basically as previous one, the services one. But again, look, the surprise would be here if the number would drop below 50. Now that would be a bit of a problem for the Chinese market. So maybe actually even the world could react negatively to that. So keep your eyes on that. Going further as well, composite and services PMIs from Germany and Europe. We're looking at UK stuff as well, the same story. So yes, services, composites, and manufacturing PMIs are taking the stage this week together with the U.S. job numbers. And speaking of the U.S. job numbers, JOLTS job openings are coming out, so the expectation is for a number to be a little bit on the higher side. Let's see how that's going to play out. Of course, what we're watching is JOLTS ADP right here, which is also expected to be, actually not also, but is expected to be on the lower side. JOLTS is expecting to be on the higher side, so it's going to be an interesting mix before we actually start hitting Friday with the when we will be getting the NFP, which at the moment the forecast sits around previous 73K. Again, we'll see how that plays out because again there should be a new person for the Bureau of Labor and Statistics, yes, because Trump fired the previous one. So yep, we'll see how what kind of number we'll get there, but most importantly, what's interesting going to be that is like what kind of an adjustment we will get on the prior number. So at the moment the prior number sits at 73K. Is going to be interesting to see what kind of an adjustment we'll get to which side, because so far the figures we were always getting adjusted quite a lot, So for example, let's say June here, actual number came out at 139K, the forecast was 130. Then the previous one got adjusted here. I mean, I don't see the numbers here. Honestly, I need to go into, let me just see if I can find, um, yeah, non NFP. Let's put the NFP in here. Let's see what we can find here. Employment situation summary, employment revisions. Can we get there? There's something here. There we go. So this is what I'm talking about. So basically, look, over the month changed first revision. There we go. Okay, so basically the June number, the July number came out at 73K. But let's say here the June number came out at 147. But oh my God, this is like not seasonally adjusted. So the previous second adjustment here, honestly, like this is really annoying. This is not the one. This is a very difficult to quickly read this. So let me just have a look if I can actually find a better website for that. Let me just double check here. Oh, too much advertisement here. Well, I'm gonna go into my usual other calendars here. I think that's much better. Yes. Non-farm payrolls, Monday, no, not Monday, Friday. We need Friday unemployment, non-farm payroll. There we go. That's what I'm looking at here. So, so yeah, basically, like looking at the previous number here, for example, when it came out at 100, where's that economic calendar? There we go. When it came out at 73K, it got adjusted basically because the previous number was at 147K in June. But now, like sorry, that was adjusted to the 14. So in June, when in July, sorry, when it came out, the actual number came out at 147K. When we got on August 1st, the actual number came out at 73K, but the previous got adjusted to 14K. And that's like a major adjustment. From 147K, you adjusted it to 14K. I mean, that was wow. Anyway, coming back to the situation with the numbers here. Look, what else we're watching here this week is the unemployment rate, and the unemployment rate is expected to increase in the U.S. So going from 4.2 to 4.3. Let's see if that's going to be the case. If it is, well, then I don't think that this is going to be a very good situation for the U.S. indices. Speaking of U.S. indices, I'll jump into those in a bit, but China very quickly. So we've had a beautiful rebound. So now we're watching this 15,050 zone. So let's see if we can clear that. If we can, I'm going to go to the upside. Let's jump into the U.S. Again, it's closed today, but hey, watching this very careful still, because look, on Friday we pushed a little bit to the downside here. Monday today, the cash index is showing some weakness, but we're sitting below this all-time high, which was around the 45,760 zone. So if we can clear that, yes, I'm gonna go I'm gonna aim for that 46,000 zone, and then we'll go from there. We'll see what's gonna happen next. But in general, we need to be very cautious. We're not far from this upside line, and if we start clearing this upside line together with the 45,000 zone, then hey, this is opening the door to some lower levels, ladies and gentlemen. S&P 500 went for a beautiful attempt to hit the all-time high. The all-time high was around here. That was reached last week at around the 6,508 zone, or almost 9. But then we rallied at one point, but then we started selling off very quickly, and now we're resting on this 6,435 territory. A negative break below that could attract more sellers into the game, but also keep your eyes on this little upside line, which could in a way help us out a little bit with the downside scenario, because let's face it, maybe we're forming a nice little rising wedge pattern here. Again, I don't want to say anything yet, but certainly that could be the case. The Nasdaq 100, of course, Nasdaq last week did not enjoy the the NVIDIA results, and the market in general did did bail on Nvidia. Look at this beautiful decline. On a weekly matter here, it was the third week in a row that Nvidia did drift to the downside. However, if we look at this this kind of pattern here on a weekly chart, well, what can I say? I mean, it looks like still looks somewhat bullish in a way, but again, let's see. For me to get comfortable with the upside on this one, to be honest, I would really need to see a push above the 184.5 zone, and if we can get a nice clearance of that, that would confirm a forthcoming higher high. For now, we're seeing a little bit of retracement. I have this Fibonacci retracement drawn here from the lowest point of April, when we were below here, below the $90 mark. Now we're like almost $100 more. A little bit of a retracement, I think that could be possible, and I think that 23.6 sits here perfectly with 161 zone on the table, which could be a nice good target. But first, let's not rush into conclusion yet, because first we need to deal with this little box right here, which I want to highlight a little bit more. Ooh, yes, why is it like this? Let me just double check. There we go. Let me just put it here like this. So this is our box. Let me just fill it in here. Yes, this is what I'm talking about. So basically, we're currently stuck in this little box, and we need a nice good exit. If we can get that clearance through one of the sides, then yes, I'll consider the next short-term directional move. Dollar index, of course, we're all watching the dollar index, and we're watching the reaction on all the job numbers from the US, which are going to be coming out. So stick around, keep your eyes open from Wednesday and Thursday. From Wednesday, and basically we'll get the jolts on Wednesday, ADP on Thursday, and NFP on Friday. But what I'm seeing here from the technical perspective, of course, it looks like more of a nice little triangle pattern here, descending triangle pattern, which according to all the TA rules tends to break to the downside. If we can get a nice clearance of the 97.42 territory right here, then yes, great, more sellers here could join in. For the upside, I would like to see a break of this downside line, and if we can get that move, wonderful, more buyers could join in. Let's jump into Europe very quickly. Looking at the picture here, yes, we found good support near this 23,922. Previously, last week, in the beginning of last week, I talked about this little hurdle, this 24,200. And I said that if this we clear this one, well, I'll go a little bit more to the downside towards the 50-day EMA or this 23,922. There we go. We reached the target. Now the question is, can we clear this 23,922? If we can, I'll aim for the 100-day EMA, and then I'll take it from there. That's in terms of the German DAX. Very simple. Looking at the economic data, of course, looking at the market reaction to the US job numbers, and let's see which way we're going to fly. But at the moment, everything looks a little bit more bearish. That said, I was hoping to see a stronger move to the downside. Jumping into a UK and the FTSE 100, this one broke the upside line, but look, don't get me wrong, the upside line is a little bit on the tentative side, so it's not really something that something to kind of worry too much. Maybe what I'm looking at here, I'm watching this little hurdle, this 9,227. If we can get a nice, we're currently trading below it, so that to me is a nice indication of a possible move lower. And the next target for me could be this 50-day EMA. I think it could be time for us to retest that 50-day EMA, because it has been a good area of support previously. So let's see if we can get like a nice nice further move towards this 50-day EMA. Let's jump into, actually France, by the way, France is experiencing a little bit of a turmoil with this political life, and but okay, the indices are not really reacting that much, but it's okay. Look, we're kind of stuck in a range, I think. That's what I can see here. Yes, we're kind of stuck in a range, so basically waiting for clearance through one of the sides. While we remain in this range, I'm not really touching this one. Anyway, ladies and gentlemen, let's jump into the Forex world very quickly. AUDUSD, beautiful clearance. You remember I was talking about this one when we were around here near the 0.6418 zone, and I said, look, if we clear it, we'll go lower, but if we don't, if we kind of rebound, if it provides good support, we rebound, then yes, I'll go a little bit more to the upside, at least towards my EMAs first, and then maybe this downside line. Well, mission has been accomplished, but now I'm watching this downside line, and if we can, remain, we currently cleared it, and if we can remain above it, I'll go to the upside. For me, the downside scenario is basically a very conservative one. I mean, I need to see this one dropping back below the downside line, and then maybe below the EMAs, but okay, the downside line could be the first step at least. AUDNZD, I talked about this one, I like it, and we cleared this, I wouldn't say it's like, initially I was thinking it was a rising channel, but yeah, it's not picture perfect. Anyway, I think we need to adjust here very quickly. Let's have a fresh look. So what I can say here is that for now we are trading higher, that's for sure. You can see that. Let's see if we can draw a channel on this side. Yeah, in a way, yeah, I would say we can. Could be, yes. And if we can basically, if we can kind of continue to respect the upper side of this rising channel, then maybe a little bit of a retracement back down, a little bit of a retracement back down towards the lower side of this rising channel could be possible. Again, while we remain inside the pattern, I think that we could see some fluctuations here within that pattern. So let's see if this rising channel will work or not. If you're looking for maybe some sort of a support level, or for a possible breakout, then I would say keep your eyes on this little hurdle here in the short run, the 1.1067. If we do drop below it, then yeah, I'll consider a move towards the lower side of this potential rising channel. AUDJPY, our risk on, risk off monitor. There we go. We had a stalling moment here near the upper side of the falling channel. Certainly this this AUDJPY, which is measuring the sentiment in the market, is is at the moment kind of still on a down move overall, but from the short-term perspective, we had him push higher, but overall we're still on a down move, and this in a way is something that that we need to worry about, because if this suddenly starts reversing sharply to the downside, that means that people are shifting away from risk currencies like AUD and NZD and jumping into something a little bit more safe haven like the Japanese yen, and that's the kind of the concept here. So basically, at the moment we're seeing kind of still this pair holding on, but overall it's in a downtrend. So let's see if we can actually reverse sharply to the downside on this one. NZD USD pushing back up here, retesting the EMAs from underneath. Let's see if we can drift back down. NZDJPY, okay, looks like a bearish structure here, and we had our big decline. We have our gradual incline, which looks more like maybe a bearish flag. So there is potential for this one to break out lower, but a confirmation break maybe below the 0.85.65 zone, something like that would be needed. USDJPY, very quickly, this one's still in the box, still watching this one very carefully. So while we continue to trade here, I'm not really doing anything here. I'm just observing the price action. I'm waiting for this one to get a clearance here through one of the sides of this box. Look, it's subjective in a way. Everything is, but if we can get a nice clearance of through one of the sides, then yes, I'll consider the next short-term directional move. However, the problem with the downside is that we have this little upside line, which could be a little bit in the way. So maybe not a major decline could happen initially. USD CAD very quickly. So of course, yes, we're going to be watching the U.S. job numbers on Friday. We have Canada's employment numbers as well. So if you're looking for a pair that could move, I think that this could be the one. So USD CAD, probably it's Friday's pair, but of course during the week we'll keep an eye on it and we'll see what's happening here. USD CHF, so I wanted to look at this one and look, so far the Swiss franc has strengthened, but this morning, like I said, retail sales from Switzerland, not the best ones, honestly, not the best ones. We're seeing some weakness kicking into the Swiss franc right now. We're seeing here USD CHF pushing back up. However, it's coiling up. The pair is coiling up, and I really don't want to touch it right now. So I'm just waiting for this one to get a clearance through one of the sides here. Let's jump into Euro USD very quickly, ladies and gentlemen. Friday again. Friday was not a very good day for the US dollar. Look, we saw euro, strengthening here, pushing back up, and we're now near this key area of resistance, which is this downside line taken from the highest point of July, and or the current highest point of this year as well. Yeah, we want to see a clearance of this downside line. If we can get that move, then yeah, I'll consider a move to the upside, but for now I'm just observing the price action. EUROJPY also pushing nicely to the upside. Japanese yen, not the best attractor of attention at this point. It seems like the market did sell off, but nothing is signaling really a major turmoil or something like that. It was mainly, we could say that this was mainly attributed to the tech world, and because that one disappointed a little bit, and that's why we got those sell-offs on Friday. But hey, especially Nasdaq. But hey, look, long story short, for now, I would say this way, that if you're looking for some higher levels on this one, still the same game plan for me is on the table. Basically, I need to see clearance of this 173 territory, and in order to go higher for the downside, I need to drop below the 171 period. That's what I'm going to do. That's what I'm going to keep an eye on. So let's see how this is going to play out. GBPUSD. GBPUSD is look, I'm waiting for the clearances here. 1.3585. I would prefer this one to to see a push here. If we can get a push through this barrier, this is the so-called neckline. Because if you remember previously, I talked about this and I said to you that look, left shoulder here, head, right shoulder, neckline, potential neckline. Let's see if we can clear that one. For the downside, I will abandon the inverted head and shoulders pattern if we do fall below the 1.3370 zone here, which also coincides with the 100-day EMA. Nice good clearance could attract more sellers into the game. GBPJPY, also beautiful push through the falling channel here, upper side of the falling channel. So now the question is, can we go and test the 199, or actually the 200 zone here? I think that's a good target. It's an interesting target, the 200 zone. Let's see if we can reach that one. And ladies and gentlemen, let's jump into the commodity world. Gold, look at this. Boom, through the area. Look, last week I talked about this and I said that if we're going to clear some of the lines here, and previously I had this little downside line right here on the table, I said that if we clear this one, I'm going to go to the upside. There we go, we cleared it and we reached my target, which is around the 3,430.50 levels, but I didn't really expect a strong move straight away. I was kind of hoping to see a little bit of a stalling moment here and then maybe a push higher, but there we go. We got a nice move here. We got the clearance. Now the question is, can we reach that 3,500 level? If we can, I'm really interested if we're going to actually go for a new all-time high. That's the big question right now. You know, we came very close. Yes, we came very close to testing that 3,500. Just fell shy by around $10 from reaching it. And now the question is, like I said, can we reach it and can we clear it? But if we suddenly start falling back below the 3,430 and 50 zone, ladies and gentlemen, I think that that could be a bit of a problem here for gold bulls. But yes, at the moment, everything seems to be very positive. Silver, similar story. We're hitting that 40 level, and we're surpassing that, and certainly we're currently trading above that. Now look, for silver, let me find a better chart here. On TVC, there we go, trading view. So silver this is the all-time high for silver. It's not the $40 here. No, it's the 49.83, almost $50. So in a way, if we want to travel there, then we have to, you know, we still have a big way to go. So what we're doing here right now is we're just kind of chilling. Yes, we're aiming for the upside, further upside, but like the 41 level, I think it looks attractive. But if we somehow do drop back below the 39.5 territory, I think that there is a chance for a little bit of a retracement back down. So maybe a retest of the 50-day EMA shown as the green line. Jumping into palladium, very quickly, palladium, beautiful rebound as well. Of course, enjoyed the moment of precious metals pushing higher, so we are retesting this downside line. Let's see if we can clear that one. If we can clear it, I'm going to go to the upside. For the downside, I need to see a drop back below the 100-day EMA shown as the blue line, and then we'll take from there. Platinum, also beautiful push higher, but I'm not getting very positive on this one yet because we're just clearing the upper side of the rising wedge pattern, which again looks more of a bearish indication. But also I want to see if on the weekly actually are we going to stay above this area. Maybe today and tomorrow we could bounce around above the upper side of this rising wedge, but if at the end of the week we're going to drop back inside of it, I'm still bearish on this near-term outlook. Copper, beautiful push higher. Yes, aiming for that 23.6. If you remember my videos, if you watched those, I said last week that this is what I'm going for. If we do push above the 4.54 territory, and then we'll take it from there. We'll aim for the 23.6. We'll see what's going to happen there next. WTI oil still bouncing around between $64 and $65. And look, as long as we stay below that and we stay below all the EMAs on my daily chart, I'm still leaning towards the downside. Natural gas pushing, yes, trying to make its way back above the above the 3 level here, psychological 3 level. So far it seems like it is succeeding in that, but it has obstacles on the way higher, the EMAs. If those provide resistance, we could see a little bit of a move back down, especially if we fall back below the psychological 3 level. Coffee, my beloved coffee, there we go, clearing again the downside line, which is taken from the high of the 13th of February. So if we're going to stay above this downside line, yes, I'm leaning towards the upside. This Fibonacci, I'm going to remove it for now. And yes, if we do stay above the downside line, then yes, I will go for the upside. I'll aim for this 418 zone, and then we'll take it from there. Cocoa, still holding on to this area right here. I talked several times about this area between the 7,636 and the 65. I need a good clearance of this area in order to go lower. Wheat, very quickly, wheat still stuck around this in between the 50 and the 100-day EMA, so I need to see a push above the 100-day EMA in order to go to the upside. For the downside, I would like to see a drop below this area right here, below this 520 zone. If we can get that move, that's wonderful. More sellers here could join in, but for the upside, yes, 532.33 zone is the one that I'm watching for the upside. Sugar, very quickly, sugar holding nicely to this upside line, but showing in giving us an indication that it wants to go a little bit lower. Again, let's wait and see. Let's see if we can break this upside line. If we can, yep, I'll go to the downside. Cotton, yep, and there we go. We're falling below all my EMAs on the daily chart, so I am leaning a little bit more towards the downside right now. So let's see if this can be sustained. Very quickly, ladies and gentlemen, for the ZERT on Bitcoin. Bitcoin, looks like a bearish flag here again, and we're below the 50 and the 100. We're below my 110,500 zone. I talked a lot about this. So at the moment, look, it's very nice in a way. Everything is pointing nicely to the downside. My next target is the 200-day EMA. In general, I do like the target of 100. Let's see if we can reach down Bitcoin Cash. This one remains somewhat bearish as long as we stay below the 50-day EMA right here, shown as the green line. My next target is the 100-day EMA, and then so on and so on. Ethereum is holding on to this upside line still, but again, there is a chance for a rebound here. There is a chance for a rebound, and if we can get that rebound, I will consider, a move back to the maybe psychological 5 level, somewhere there, but 5,000, I mean, yes, but yeah, at the moment, if Bitcoin suddenly starts falling off the cliff, then I don't think that Ethereum will, just sit around here somewhere. It will also follow suit. Ripple drops and currently trades slightly below the 100-day EMA, shown as the blue line. So yes, there is a good chance for this one to drift further south. And my next target is the 200-day EMA. So let's see what's going to happen here, and we'll go from there. Jumping in terms of the upside, I think that's a very straightforward approach here, very conservative approach to wait for a break of this downside line, which is taken from the high of the 21st of July. And then, yeah, we could see if we could, go back to these like 3.40 zones, 3.65 zones, and so on and so on. But at the moment, the downside scenario is slightly more interesting. The same story with Litecoin. I need to see a clearance of this 106.60. If we can get a nice clearance of that and a drop below the 100-day EMA, I'm going to lean towards the downside. Dogecoin is also looking bearish here, but I need a clearance of this territory here, the 200-day EMA. If we can get that, great. I'll go lower towards my 0.1883 zone, and we'll go from there. Polkadot. Okay, now this one is interesting because look, I talked about Polkadot, and I said to you that I will wait for a clearance of this triangle where we're currently trading in, a clearance of one of the sides. If we can get the clearance of one of the sides, then I'll consider the next short-term directional move. And at the moment, this 3.66 area is providing good support together with this upside line. We did get a false breakout. Maybe it's just a little tease. However, if we were going to get another break below this area, yep, I'm leaning towards, much lower levels here. And finally, Tron did have a little bit of a retracement, but held below the 0.3439. So if we continue to trade below that, I will continue going lower, but I'll go lower if